Hey, in this video, we're going to take another look at what happened this week and what to watch out for next week. I'm recording this on Saturday morning. Now recently, it seems like there's a trend of opening with a gap down on Mondays, only for the market to recover later. Last Monday, we opened with a gap down due to the deep sick panic. And this Monday, it was because of Trump's tariff announcements. Both times, the SPX recovered nicely during the week, but Friday closed in the red. This was last Friday, and this was this Friday. The big question is whether this trend will continue. Will we open with another gap down just to keep the pattern going, or will this be a higher low and move up from here? We'll find out soon, and next week's economic data will play a role, as we have both CPI and PPI reports coming up. Let's check out the NDX. This trend line wasn't drawn today. It was there from last week, and we bounced perfectly off of it on Friday. But the pattern here is very similar. Gap down on Monday, full recovery, then a sell-off on Friday. No new highs here either. Looking at IWM on a weekly chart, it managed to close positive, but nothing major happened. However, gold had some serious movement. It hit a new all-time high with a strong weekly candle. On Wednesday, it made a fresh high, and by Friday, it almost managed to break it again. Now, as for crypto, we saw a significant drop earlier in the week. There was a sharp wick down at the beginning of the week, and it was even more extreme in ETH/USD, dropping all the way to 2,100. Although there was some recovery, both Bitcoin and Ethereum closed the week in the red. Regarding the dollar, we had a strong move up at the beginning of the week due to Trump's tariff news, but things calmed down since then. Oil has also seen significant movement. It dropped quite a bit. If we check the weekly movement, it started the week around 75 and closed near 70. The question is whether this support area will hold or if we'll go lower. Now, moving on to the VIX, it didn't react much to Friday's sell-off, closing up only around 6%. However, we can see the same pattern here as with the SPX. Whenever we opened with a gap down, volatility spiked, but by the weekend, things settled down again. Let's take a look at the Magnificent Seven stocks. Apple was mostly sideways throughout the week, with no significant movement. Like everything else, it opened with a gap down on Monday and struggled to recover. Amazon's earnings report came out Thursday after the market close and was slightly worse than expected, leading to a sell-off on Friday, though overall market sentiment contributed to the drop. Microsoft also sold off, retesting a key level. Nvidia, however, was very strong compared to other tech stocks. It was completely resilient, moving against the trend. It started the week at 114 and climbed all the way to 130. Meta also ignored the market's weakness and kept making new highs throughout the week. On the other hand, Google saw a major disappointment after its earnings report, dropping from 208 to 190 on Wednesday, then breaking below that level again on Friday. It was one of the weakest tech stocks. Tesla also continued to decline throughout the entire week. Now, let's check out Forex Factory to see what drove the market down on Friday. One key factor was the NFP report, which came in significantly lower than expected, 143,000 versus 169,000. Another concerning data point was the average hourly earnings, expected at 0.3%, but coming in at 0.5%, which raises inflation concerns. The unemployment rate was in line with expectations, which was a positive, but the consumer sentiment report came in much lower than expected, 67.8 versus 71.9. Overall, these factors had a negative impact on the market. Of course, it's always easier to explain market moves in hindsight, but these macroeconomic factors weren't positive for the market on Friday. As a result, the probability of a Fed rate cut on March 19th has decreased. Previously, it was around 15%, but now it's down to just 8%, meaning there's a 92% chance that the Fed will leave rates unchanged. However, a lot can happen between now and March 19th. Looking ahead to next week, the key event is the CPI report on Wednesday, followed by the PPI report on Thursday. If these numbers also disappoint, it could add fuel to the fire after the weak NFP data. On Friday, we'll also get core retail sales, which could have a market impact as well. So, there will be plenty to watch next week, and I don't think we'll be bored. That's a quick summary of this week. If you have any questions, feel free to reach out. Thanks for watching. See you soon.